Hello everyone, I'm Dr. Kalpana. Today we are going to learn about principles of lending. So lending is something which is very important topic of banking law, and bank credit known as loan is extended by banks to industrialists, executives, traders, private individuals, and for different purposes. So primary business of commercial banks revolves around the interest earned on these loans and advances. So major portion of the bank funds is allocated to loans and advances and considered the most profitable business of commercial banks. However, lending involves a certain inherent risk, prompting banks to adhere to specific principles. Actually, what principles means here, what care has to be taken care when financial institutions are extending loan to the different persons, industries, companies, and individuals. So there are three cardinal principles of lending, that is safety, liquidity, and profitability, on which loans and advances are extended by the banks and NBFCs and other financial institutions also. So nationalized banks in India, like others, also follow these principles while they employ their funds. And these banks are also required as per Section 8 of Banking Companies Acquisition and Transfer of Undertaking Act 1970 in discharge of their functions to be guided by such directions about matter of policy involving public interest as central government may give. Central government and Reserve Bank of India in the past have issued a number of directions in this regard, highlighting the social purpose which they have served. So, therefore, traditional principle of profitability had undergone a radical change, and profitability has been subordinated to social purpose in certain types of lending. So, still, even if the social purpose has been taken as a priority object of lending and profit has been cornered, then also these principles are required to be followed by the banks while they grant or sanction any loan. The first is safety. So ensuring the safety of the depositor, first we need to know where from this fund is available with the banks. So it is the money of the depositors, and depositors' money is something has to be kept safe by the bank, because this money is entrusted to the bank by the depositors based on trust, and banks uh, advance loan from these funds only. These means borrower can repay the loan with interest as per loan contract. So repayment depends on the borrower's capacity and willingness to pay, assessed through tangible asset and business success. So banks, while they are checking with the documents and eligibility of loan, as most of the people are aware about certain basic things when loan is sanctioned by the banks. So safety means here a bank ensure that money would be recovered, that loan would be recovered. So most of the time, collateral has been taken as a safety and security by the banks while they advance any loan. Liquidity. Here, liquidity means there are collaterals when it comes to, there are two kinds of collaterals deposited with the banks by the borrowers. Movable property, for example, it might be your own fixed deposits. It might be something gold ornaments, which can be uh, liquidated by the banks in case of default or non-recovery of the loan. So bank primarily offer short-term funding mainly for working capital. What is working capital means? Money is utilized for another purpose of making it working. So that loan is basically advanced for as working capital. So loans are largely repayable on demand. So bankers must ensure the borrower can repay the loan promptly, relying on easily marketable assets pledged as security. So when it comes to a pledge, which is a movable property, can be liquidated in order to recover the loan, which is easy. The problem comes when immovable property is mortgaged, and sometimes they are not able to sell it out or liquidate and recover their loan so easily. It is definitely a problem and challenge with the banks. Profitability and social purpose. So profitability is third principle of lending, because most of the commercial banks are prioritizing and they are profit-making institutions. So commercial banks are profit-driven institutions, and they must generate profit to pay interest to the depositors, salaries to the staff, cover operational expenses. Interest rate depend upon directives from Reserve Bank of India and the risk involved. So, as we have already discussed, the social purpose is something where by nationalization of bank and bringing NABARD, regional rural banks, extending banking services to the maximum people and for social welfare. So, traditional profitability has evolved, subordinating profitability to social purpose in certain lending types, not everywhere. So central government and Reserve Bank of India have issued directives emphasizing the social role banks should serve. So for example, if they are economically weaker section of the society, so home loans and many other industrial loans which are having a small amount of loan can be advanced by the banks on a lower rate of interest in comparison to other loans. Repayable on demand means recovering the loan amount along with interest by the banks. So there are two important aspects has to be taken care of, and banks needs to investigate about it. Capacity of the borrower and willingness to repay the loan. So capacity to pay, this depends upon borrower's tangible assets and success of their businesses. So if business thrives and generates profit, a borrower can promptly repay the loan. Otherwise, the loan is recovered by selling the borrower's tangible assets. These are the two methods. If borrower is failing to pay on that loan amount and interest on time, then banks are empowered by law to recover their loan under Recovery of Debt and uh, Bankruptcy Act 1993. That is very important aspect. There had been identification of willful defaulters. If we see NPAs, increasing volume of non-performing assets suggests that banks have come across willful defaulters when it comes to repaying the loans, like case of Mehul Choksi, Vijay Mallya, Nirav Modi, which are big time defaulters. They uh, got loans from the banks, which were a depositor's money, and fled away from the country also. So willingness to pay, this depends upon borrower's character and integrity, honesty. Bankers carefully assess the borrower's integrity, character, and reputation. They also rely on the borrower's tangible asset to ensure the safety of the lent funds. So primarily they believe on the collaterals. In case of the default, they are in position of liquidate their assets and recover their amount of loan along with cost and interest. Uh, Another principle along with these three cardinal principles is purpose of the loan is very important aspect of lending facility by the banks. I'm talking about here specifically financial institutional finance funding. So bankers inquire about the loan's purpose. If you are applying for car loan, then you cannot buy a house. If you are applying for a home loan, then you cannot buy another thing. If you are applying for industrial loan, then purpose has to be ensured by the banks. For example, I think most of the people who are hearing here must be knowing about that. So loans cannot be granted for unlawful purposes, as law of contract says, and it cannot be sanctioned, which is coming in violation of or against public policy. So bank exercise utmost care while sanctioning loans to ensure they align with the ethical and legal standards. So bank carefully evaluate the purpose of each loan to ensure it aligns with the ethical and legal standards. And this scrutiny helps to prevent the misuse of funds and promotes responsible lending practices. And it imposes a responsibility on the borrower also, okay, for what purpose they are taking loan, that should be spent in that only. So banks are also having that responsibility. The fund is being used for that purpose, what for it has been sanctioned. Principles of diversification of risk. Whenever it comes to advancing loan, uh, there are a risk involved. So there is a careful selection by the banks. Banks are careful selecting the borrowers, take tangible assets as security to ensure loan recovery. Tangible assets provide a sense of security, but some risk remain due to market dynamics and potential price decline. It may happen due to uh, any kind of situation where market may having there is a price fall of a certain movable and immovable property. So to safeguard against unforeseen events like natural calamity, like earthquake, flood, or political disturbances, banks follow the principle of diversification of risk. This is based on the maxim, do not keep all eggs in one basket, as said by Warren Buffett when he advises the investors to how to make your portfolio so far as investments are concerned. So do not invest all your money in one share or in one product. So there is a possibility if it falls, then the whole of your funds may collapse. So wide distributions of banks should not advance loans to a few large firms or specific industries. Instead, a loan should be distributed among a good number of customers from different trade and industries, that diversifying the risk involved in lending, meaning thereby in case there are defaulters, but there are honest people who are repaying the loans. So looking into that structure of the market and uh, risk involved in lending, banks are advised to diversify their risk. Balancing safety, liquidity, and profitability. These are three important lending principles. So banks are required to maintain a balance. Safety is the first thing. Ensuring safety of the depositor's fund is top priority. Bank required to assess the borrower's ability and willingness to repay the loan. Maintain liquidity. Bank requires to ensure that borrowers can repay loan on demand or within a short period. This depends on asset pledged as security. Achieve profitability. Commercial banks are profit-making institutions. They must employ their funds to earn profit to cover expenses, and they pay interest to the depositors. So today's key takeaways are: sound lending principles are crucial for banks to manage risk and ensure profitability while serving the public interest. Safety, liquidity, and diversification are key Consideration in lending processes. Bank must carefully assess borrower's capacity and willingness to repay the loan amount along with interest, diversify their loan portfolios also, and balance profitability with social responsibility. Adhering to these principles ensure stability and sustainability of banking system. With this, I would end here. Happy learning. Thank you so much. Take care.